importantly, there is a bigger story that's playing out, and that's related to the sliding of the rupee, which has slid past the crucial 90 per dollar mark.
Yes, definitely, and it has hit a fresh record low for the third straight day. In fact, persistent portfolio outflows, weak trade data, and uncertainty over the delayed US trade deal are keeping the currency under pressure. In fact, my colleague Anurag Joshi is joining with more details what actually is happening in rupee.
The Indian rupee has passed the $90 mark. The Indian rupee touched an all-time low, a fresh all-time low of 90.28 per US dollar. And the rupee has eased more than 0.4% versus yesterday's close. Now, there has been sporadic sale of dollars by certain public sector banks, and this has been on behalf of the Reserve Bank of India. An RBI intervention has also was seen in the morning at 90.15%, and it is very sporadic during the day. So what are the reasons? It is uncertainty of the India-US trade deal, and that's been a major dampener for the Indian currency. And also through the year, if you look at the YTD number for the FII outflows, that's over $16 billion. That's the most in Asia for any economy. The rupee is also the worst performer in Asia so far in 2025, declining more than 5%.
That's right, Anurag. So the uncertainty over the US-India trade deal, that's widening the gap. And of course, rupee is seeing a free fall. We'll have to see the kind of measures that the RBI undertakes. Will there be stronger measures that RBI will undertake? That remains to be seen. But for the moment, let's also take a look at what will be the impact of depreciating rupee on the Indian IT sector, and how will companies' dollar revenue be impacted? My colleague Ishika is here with that analysis.
Rupee crossed an important psychological level today, the level of 90 per dollar. Now, this has a negative impact for Indian markets, but Nifty IT, however, is positive on the back of this weakening. Now, while Nifty 50 is mostly in red, the top three gainers are Wipro, TCS and Infosys. All three are Indian IT companies. Now, the logic behind this is that the big percentage of revenues of these IT companies comes from the United States. 48% of TCS revenues are from United States, 58% for Infosys and HCL Tech, 50% for Wipro and 78% for LTIMindtree. So USD and IT companies are correlated to an extent. For instance, in the context of falling rupee today, if INR falls by rupees 1, then Wipro's PBT increases by 3% and vice versa. Similarly, for HCL Tech, if INR falls by 5%, then their PBT increases by 3% and vice versa again. So a weaker INR increases the rupee value of the revenue of these IT companies, thereby improving operating margins, as most costs are denominated in rupees. This makes Indian IT companies more price competitive globally. But if INR remains weak for too long, imported tech costs and inflation rises, partially offsetting gains. Therefore, currency gains don't help much if global IT demand is weak altogether.
All right, Yoshika, thank you so much for putting that into perspective. But one question which has been asked by all the viewers to India tonight is, what happens to the frequent travelers, those who have plans, especially in the month of December and January? And fresh rupee weakening has raised concern for them. In fact, this could impact airfares, hotels and shopping abroad. My colleague Mitali is joining with details on how the impact will be on this story.
Right, so the Indian rupee is again at a free fall, and it's now Asia's worst performing currency year to date. Against the rupee, the US dollar is up 5.2%, yen is up 6.2%, Canadian dollar 8.3%, British pound is 11% up, and the Swiss franc nearly 19% up. Clearly, the pressure on the rupee is intensifying. Now, what's driving this slide? Let's have a look. So there are three key factors that come to our knowledge: aggressive dollar buying by the banks, continued FIS outflows from the Indian markets, and the ongoing uncertainty around the global trades. All of this has pushed the rupee at the fresh lows, impacting not just the markets but also everyday consumers that are planning the overseas travels. Now, when the rupee weakens, traveling abroad gets noticeably more expensive. Airfares, the hotel stays, also the shopping overseas all rise in cost. and any booking linked to the US dollar or other foreign currencies immediately becomes pricier. Now add higher the jet fuel prices and the global inflation, and travel budgets can shoot up sharply. Now, so what specifically gets costlier? Let's have a look at that. A weak rupee means you need more rupees for every dollar spent. Airfares rise because the fuel imports becomes expensive. Hotels and resort rates move up due to the forex-linked pricing, and even the shopping and sightseeing abroad cost more because of the conversion fees and also the card charges. So in short, a falling rupee makes your entire trip heavier on the wallet. But travelers do have the ways to manage these rising costs. Using the multi-currency forex cards help lock exchange rates and reduce the fees. So always choose the local currency while paying abroad to avoid the INR markups. And also, booking flights and hotels early can also protect against the sudden spikes. So, what could be the best alternatives when the rupee is falling? Usage of multi-currency forex cards or local currency billing, locking of the forex rates early can also help you keeping your costs under control. So, a weak rupee may make your foreign travel expensive, but with smart planning and the travelers can stay ahead of the currency turbulence.